Hey traders, welcome to Charts and Coffee for the 18th of February. Great to see everybody. Hope everyone's doing well. Looks like we might be in for a little bit more of I won't say rocky day, but a little bit more weakness. Here you can see we're trading lower from yesterday's close, even though we rallied into the close on the S&P here. Looks like another kind of at least weak morning. Which, by the way, I don't mind a weak morning, because if that means the market just wants to then run some stops to the downside and then rally, perhaps, who knows, gang? Let's not assume. Let's also keep in mind that we have not even touched, for example, the 21 exponential moving average on the daily time frame of the NASDAQ. And so one thing that I do, here, let me show you this real quick. And this has to do with anchoring volume-weighted average price levels. So I'm going to go back 10 days, right? So today's the 18th, so 17th would be day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm going to anchor a VWAP to that 8th, right? It's a 10-day rolling VWAP. So I'll just anchor this to the 8th, like so. And there we go. Do you see how we're trading below? Now, there's a lot of different calculations for VWAPs. We'll talk about that maybe some other time. I've got an entire course dedicated to volume studies, and maybe we'll actually do an update on Countdown Trader for some general ideas about volume and VWAP, volume weighted average price. But as long as we're trading below that rolling 10-day, that's something that I will keep an eye on. So you'll see how yesterday we snapped back above that 10-day, and then today getting back down below it. So that's almost a line in the sand for where the bullish or bearish momentum might be. So let's say we actually do the same thing on the S&P, that rolling 10-day. You can see where that's sitting. And then on the Dow, by the way, and a number of the sectors within the Dow were faring far better than some of the other broader averages, NASDAQ and S&P. Also take a look at how much better financials were doing yesterday, how much better communications were doing yesterday. There's financials. Here's communications. What's communications? Facebook, Google. So take a look at some of those. I think energies are still lagging a little bit when you think about the narrative around crude oil and RBOB. But again, there are relative outperforming parts of the market. When the markets are moving broadly higher, gang, so I'll leave you with this and we'll tackle some questions here. When the markets are moving broadly higher, number one, it's easier to trade. I mean, let's just admit that. When the markets are moving broadly higher, it's also better to play the tide than individual boats. And that's an entire issue here in Countdown Trader, understanding boats and tide. When the market's overall going higher, bet on the whole tide. When we have a little bit of, I wouldn't even call this a sell-off, but when we have a little bit of weakness or we have a little bit of consolidation or chop, that's when you'll notice you really, really need to be a little bit more of a sector picker, a little bit more of a stock picker. Okay, so I hope that helps and makes sense. Let's see here. Let me get on over to the comments. Good morning, everybody. Great to see you guys. So let's start off with the first question. Hey there, Alex. The smell of blue light specials is starting to permeate the air. Yes, it is. If we can get just a little lower, my thoughts. So straight up, I'm going to get stopped out of some of the more aggressive levels of positions that I'm in. I don't mind if I get stopped out at break even because I've already hit initial profit targets, scaled out of 50% of my position. And then, at that point, I'm just risking unrealized profits. Where it will sting is positions that have not hit T1 and then hit my predetermined percentage based of premium paid stop loss along with a break of the wave. So it's going to be both. I want a price-based validity, and then I'm willing to risk a certain amount of the premium that I've paid by percentage. But to the flip side of that, absolutely, if we get a pull to the 21 EMA, if we get a pull back to the 34 EMA wave, the things that we will be able to scoop up at unbelievable blue light specials. What is a blue light special, gang? I'm dating myself here. Kmart used to have those blue light specials, something is a crazy deal for a very short amount of time, that's what a blue light special is. And so if we do continue to pull back, I'll be happy to take advantage of the same kinds of moves we've seen here, here. Yeah, why would I not look at a pullback as an opportunity? You're absolutely right. But again, the flip side of that, again, all my cards on the table, I will have been stopped at break even on a number of positions, and I will have taken small losses in a number of positions, 15 to 25% of premium paid, which is not a huge amount, but it might be a number of positions. And we've got to talk about managing risk, which is part and parcel with taking losses. Nobody wants to talk about taking losses, yet in an environment like this, it happens. So we want to be patient. We want to be patient. If the markets are going to continue to be weak, we will definitely really spend a lot of time, building watch lists. I've got this entire pad, except for the very last page, has, watch lists and ideas for what's happening right now. So thank you for the question. Hey there, James. Good morning. With the ES set to open below yesterday's close, what do I want to see in order to fade? So again, I need to not only open below yesterday's close, but below yesterday's low for what is called a true gap. And then I think the likelihood of a fade is higher. I think a fade on the ES could be pretty likely anyways. We're getting very close to the 13 exponential moving average. And let's see how, now here's where you want to take a look at how the S&P is likely to behave. What are financials doing? And what is healthcare doing? Now, of course, we have the XLK, Apple, Microsoft, that tech weighting within the S&P. We have it within the Dow as well. However, if financials and healthcare together, both, it can't be one or the other, it's got to be both. If they can be moving higher here, then I think we've got a good opportunity to take advantage of the ES bouncing off that area around the 13 EMA. So let's see what happens. Now, here's the other thing too. Think about this. If we have relative outperforming sectors, I mentioned XLC, XLY, XLF, maybe even XLE. We have relative outperforming sectors. Be willing to crack open that S&P and look inside. If you did not check out the free video that I cut yesterday for the futures, you can check that out at the Simpler Trading. Here, let me show you the link here. You can check that out at the Simpler Trading YouTube page, but I'll push the link through in the chat. And so I had a breakdown. Oh, give me 1 second here. I did a breakdown of how I use sector SPDR in order to look at whether we're really seeing the market flee from those more high beta, high Momo, reflation type sectors, whether we're really seeing movement to the upside, rolling out of, say, tech and into utilities and out of discretionary and into, for example, staples. Are we seeing that? And I'm not seeing that yet, but I show you how I track that. And I did that in yesterday's free video. So I just pushed a link through, check it out. I think you'll find that super helpful. And I'll talk a whole lot more about that in the mastery room, the Sector Secrets mastery room here today, James. Absolutely. All right. Next up is EXAS. Sure. And that reminds me, as we take a look at Exact Sciences, that right now is probably a very good idea to scan uncorrelated names. Again, we have an issue about uncorrelated names in the Countdown Trader. So by the way, if you don't know what I mean about correlated versus uncorrelated stocks, check out the issue from the 12th, I believe. Yeah, the 12th there. And I describe what that is. And so I'll usually use something like FinViz to scan for very specific scenarios. Right now, we're in a reflationary environment, so your high float is going to continue to work. That's part and parcel with reflationary environments. These short squeezes are not just a Reddit Wall Street bets phenomena. This is common in this type of environment, meaning we see movement to the upside in high short interest float, right? Stocks. All right. So I'm out of water. Doing a little water this morning in Charts and Coffee. Been up for a while. I've gone through my allotted coffee of the morning. So we're doing a little water for Charts and Coffee here today. All right. So I like it, but notice that we have the earnings, post-earnings move. Give it a minute. What I'll say by that is, let's wait for an inside day or a minor low. Do I mind the buy? Not one bit. It may behave a little bit like what you saw back in early January. All right. So Apple. So as long as the tide is going out on the broader averages, gang, Apple's going to be part of it. So am I going to continue to expect lower lows in Apple? Apple's been a laggard, and it's not even one of the better individual stocks within the XLK. I did take a shot at Apple. Again, all my cards on the table, and we put in a stop based on how much we're willing to risk a premium paid. Took a little paper cut. I don't mind taking small paper cuts. In this environment, we're going to take small paper cuts, right? The best approach right now, again, kind of going back to the previous question, Beverly, the best approach right now is, for me, focusing on uncorrelated relative outperformers, not stocks that are laggards within broader sectors and averages, but rather stocks that are maybe a little less weighted within the overall sector or index, or really not part of that broader average narrative at all, meaning it's not heavily weighted within the index and it's not heavily weighted within the sector. Having that separate uncorrelated watch list is really important to have running parallel alongside your correlated watch list. Okay. So thanks for the question. And yeah, I'm not a big fan of Apple. I was for a moment, and then the validity of the trade broke, and I just got to move on. And, it's not fun, but that's just part of it. BFF, Village Farms International, uncorrelated, heavily weighted where, right? That's what's great. Relative outperformer, double green, just need to pull back. And right now, I have a lot of names that I would consider to be names that are not highly correlated. Yeah. I'm looking, one of the ones, I think when I saw this Village Farms, it reminded me of this thing right here in SMPL. Not highly correlated, pulling back. Is there a chance this double green is going to rally even if the broader averages don't? Right? That's really what we're talking about here. Somebody had asked me earlier about DraftKings. Same thing too. I don't think DraftKings gives a hoot about really what's going on in the NASDAQ or the Dow. They might see that outgoing tide, but this has a narrative all its own. So some of those ideas, BYD was another one I was looking at. So you notice, like, I've got an entire list of names that I'm looking at that would be moving separate from the broader averages. So I like some of the questions we were seeing in terms of, hey, what can we see apart from those heavily weighted stocks in the Dow or the NASDAQ or the S&P? All right, let's see. What else do we have here? Do I generally wait? Hey there, Rick. Do I generally wait for the afternoon to close trades when they threaten to break the point of validity in the morning? Rick, fantastic question. Most of my decisions that are not, say, my day trading futures, I have those two parts of my life, right? So yes, I would say I make a lot of my decisions about exits the last hour of the day. Entries, and a lot of folks ask, Raghee, you just kind of watching this stuff all day? I am, because I can. This is my office. This is what I've been doing for 3 decades, but you don't have to. If you use alerts, you don't have to sit around watching this. So if you're curious as to, all right, Raghee, if you're only watching the last hour of the day for exits, what happens if something happens in the middle of the day? Well, I am notified because I keep whatever platforms I'm using, like, for example, Toss, right? Thinkorswim. So Thinkorswim's running on my phone. And when one of my predetermined alerts, and not just alerts for price and the stock or ETF or futures contract, I can also place an alert based upon the amount that I'm willing to risk of the premium that I've paid. So there's lots of different types of alerts that we place. And by the way, this is actually last Friday, we spent the entire Q&A, about an hour, talking specifically about the kind of alerts, how we place them, where we place them in our sector secrets. So if the way that I look at the ETFs and the stocks and the indices and the stocks resonates with you, come check out what we're doing over at Sector Secrets. I think you'll really dig it. And it's basically a lot of what we talk about here, same kind of approach, same kind of mindset that we talk about here in Charts and Coffee. So thank you for the question. Yes, last hour of the day, but I'm always aware of when the value or the level is being broken because I place those alerts on my platform. That platform really is a trading partner. It really is your trading partner. A lot of people would behoove themselves to think about their platform as a trading partner, as another set of eyes. All right, next up is Tesla, a blue light special. So again, Tesla used to be not as correlated to the broader averages as it is now. It was heavily weighted within the NAS before its inclusion into the S&P. So when the tide goes out on QQQs and SPYs, SPX, NDX, ES futures, NQ futures, yeah, Tesla can buck the trend. You know, they're killing it with Bitcoin right now. But it's going to be tougher. While the tide's going out, Tesla's going to have to really motor hard in order to fight that trend lower. Does that make sense? So yes, I wouldn't be shorting Tesla, but it is going to be subject to the outgoing tide in the S&P and in the NAS. And thank you for that question. A lot of folks are asking, Rob, would you buy Tesla? Yeah, I actually down in this area would be interested in the long position, or let's look at a different way. Bullish option strategy. Put credit spread, call vertical, straight up long call. All right, let's see. Regular guy, I do not hedge. It's not to say that other folks can't and do well at it, but I think hedging when it comes to trading is actually, you're going to spend a lot of time, you're going to spend a lot of money sometimes. And remember, hedging is something you have to continually do because you can't really market time a hedge. You might have certain pockets where you're more likely to want to do it. So what I would recommend, and this is what I've done throughout my career, because I don't believe in hedging. What I believe in is if you feel like you want to put a hedge on because whatever for example, I might be looking at a market that's gone yellow, reaching the top end of my V-score indicator, reaching some sort of resistance level, etc. And I'm thinking, gosh, maybe the market's going to pull back. We don't know, but I want to be prepared for that. Some folks will put on hedges. But remember, that inclination probably has hit a lot of traders throughout this historic run for the better part of the last 14 months. Well, give it 12 months, right? In terms of that continual move to the upside, we've gone too far and we're parabolic and we're probably going to pull back, right? I totally get it. What I recommend instead is control risk, not by hedging, but with position size. Smaller positions, more conservative levels, keep more cash. And that's what I do. That's what I do. Now, again, I'm sure there's other folks that have hedging strategies. I have some that I've used in the past that I find that it really is just a grand waste of time and money, my opinion. What I want to do is when that inclination hits me, more conservative entries, more cash, and fewer positions so that when and if the market rolls over, I can get opportunistic and take advantage of that pullback, those blue light specials. The other thing to remember too is the degree to which anyone out there, and this isn't just regular guys specifically, but the degree to which anyone has to hedge or feels like they need to is the degree to which they're buying near highs, in which case their tolerance for these kind of pullbacks are next to nothing. Because we don't buy near highs, because I'm always trying to buy some sort of pullback, the inclination to want to hedge, the necessity for it is almost nil. Right? What I'll do again is if I find the markets are stalling, chopping, etc., I'll modify where I'm entering, how much I'm entering with a focus on cash. So just a different way to do it. That's my approach to that. And thank you for the question. Thank you for the question. Okay, so let's see. What is the indicator on the bottom of the chart? Oh, that's a trend indicator. We call the JT multi-trend. It tracks the 8, 13, 21, and 34 EMAs. Thank you for that question. Let's see. Well, James, I appreciate that. We have a lot of great traders over at Simpler, and we all have our own strategy and style. And my analogy is always like a boy band. They all harmonize together. I think all the traders at Simpler, we have a certain harmony. We have different strengths, but in a boy band, someone always has their favorite, right? So I kind of look at it that way. So thanks. I appreciate it. We have a lot of great traders at Simpler. I appreciate that. If I don't hedge, do I trade the VIX or the UVXY? I don't trade no, not often. Again, hedging is so let's think about hedging the way I interpret it. Hedging is wanting to stay in the market even when the market heads lower. Now, you asked me about portfolios, different conversation. Time horizon is going to dictate what kind of protection I need. So if we were having a not charts and coffee conversation, but say capital and coffee conversation, the way that I position myself in terms of my portfolio, where I'm looking at 6 months to a year minimum as a time horizon, different conversation. But again, the need to hedge really comes from how much heat do you want to be able to sit through. If you're entering with momentum entries at the top of the trend, near new highs, you probably would need to consider that. But again, no, I don't trade VIX that. I don't need to, my friend. And I don't say that out of like arrogance. I just say that because the way in which I protect myself has more to do with the size of my position, where the position is built, and the stops. Stops are, to me, what keep me out of trouble. All right. Let's see. Yeah. So Chai, exactly. There's a lot of ways to do this. And I have notepads full back in the day when I was testing different hedging ideas. I just found it was, again, a lot of time and money spent to put insurance on something when in reality I'm a trader, so I want to stay opportunistic. So is the NQ in a downtrend? Marty Jean, what time frame specifically are you talking about? But if I go to the daily time frame, oh gosh, no. Look, look at the overall direction here, and I'm going to call 3 down. So if you're looking intraday, totally different conversation, my friend. If you're talking a 1 minute, 5 minute, 15, 30, that could be a different situation. But if you're looking at the overall trend higher, yeah, no, I don't think this is a downtrend at all. I think we've hardly even made a shallow retracement. Okay. And on that note, I'm going to go prepare for the morning. So those of you that are heading on over to the futures and the options room, I'll see you guys there. And for everyone else, check out what we've got here at Simpler, whether that be one of our main rooms like the futures room or the options room or one of our many masteries. Come check it out. You can join me over at the Sector Secrets Mastery. And in the meanwhile, keep an eye on those blue light specials. I'll see you tomorrow morning. Be good to each other.